Just last week, on June 5th, my birthday, something really big happened in the crypto world. Circle went public, and the share that was starting at $31 for those who get into the IPO price ended up the next day at the New York Stock Exchange at $69. Nice. And they closed at $83 the same day, which is kind of insane for stocks. You have to remember, this is not crypto where plus or minus 50% is okay. So in this video, we'll dive into it, the caveats, whether this is about to bring us that 2017 style ICOs style, but in the 2025 IPO wrapper, or whether the IPO of Circle was overvalued for something that is a short-term US bonds wrapper. Circle is the first major cryptocurrency company to go public since Coinbase in 2021, and its massive success overshadowed Coinbase actually if you just base it on stock price. Coinbase in 2021, direct listing started at $389 opening and closed at $429, valuing the company at $86 billion on day one. So there was a lot of volatility surrounding that. And Circle, on the other hand, it just went up and up. So there is an evidence for unmet demand in the market and for institutional demand especially. So this kind of got everybody asking whether this success is about to start and spur a new wave of cryptocurrency IPOs, such as Kraken, Gemini, and certain other cryptocurrency exchanges. And there are a lot of news and rumors that Gemini actually has already confidentially filed the files for the IPO. This positive momentum and a really positive news outlet cycle is kind of pointing out to the very similar outline of the 2017 ICO boom, which was whoop and went down really quickly because there were a lot of scams and whatnot. I wasn't there, I will be frank. I'm glad I wasn't because I was 15, but I read some, researched some, and here are my comparisons and how this particular IPO or potential IPO boom is different. So, an ICO or initial coin offering was a fundraising method, and it still is, where blockchain startups bypass traditional routes, selling digital tokens directly to investors, often for Bitcoin and Ethereum, and right now stablecoins as well. It was kind of describing as blending the IPO model with crowdfunding. Several factors created the perfect storm in 2017. That was the massive hype around blockchain. Check for that. Accessibility, allowing anyone to participate in early stage funding. We don't have that with IPOs as much. Intense fear of missing out. Well, that is very present right now as well. And that is fueled by early crypto gains and a regulatory twilight zone, I would say. To be honest, it's still a kind of regulatory twilight zone, but we're getting a bit more, understanding, especially with the Stablecoins Genius Act and a bit more just politicians talking about crypto.
The United States will be the crypto capital of the planet and the Bitcoin superpower of the world.
And now let's look at the numbers. Over 5.6 billion was raised in the ICOs in 2017 alone, with over 800 launched. That's more than 2 a day. And the projects like EOS, hear me out, raised a whopping 4.1 billion. Telegram raised 1.7 billion. However, there was some regulatory scrutiny afterwards, so they had to return 1.5 billion, which is kind of okay, whatever. And Filecoin raised 257 million, which is a huge number, but it kind of dwarfs in comparison to others. 800 companies in 1 year. You can expect some of them at least be random, fraud, scam, or just underbaked products and people trying to rug you. And that really did happen. And the warning signs were everywhere. There were unrealistic valuations for projects without anything working, teams disappearing after raising the funds. That was common. You could not even find the pictures of the teams. The 2017 boom kind of ended around 2017 as well. And the US SEC, the Securities and Exchange Commission, began taking action, deeming some of the ICOs as unregistered securities, which is kind of interesting because if you think about it, it was kind of an unregistered security until the ICO, but then cryptocurrencies are considered commodities, so it was an unregistered security until a certain date, and right on that date it turned into a commodity. And by 2019, over 80% of ICOs were considered dead or scams. 80%. So basically, the crypto winter started. Many people lost their funds and hope in crypto. And for a while, there was not much talk about ICOs, probably until 2021 when we had it all over again. But anyways, this whole thing started off very similarly to how this cycle with IPOs is starting, because there was a lot of FOMO, as I mentioned, there were huge valuations, and there was a lot of hype and unmet demand for crypto and people participating. However, there are 4 key differences that I want you to consider here. First, regulation. The ICO boom started with the regulatory gray zone and ended with the regulatory crackdown. So this is already painting a very different picture, because Circle is one of the most regulated crypto products you can find out there. It basically works with the government, and it holds US government bonds. And it worked with the SEC to file for all the necessary documents. And furthermore, we have the Stablecoins Act incoming, the Genius Act that many people talked about in crypto. You know, experts say this could drive adoption, but experts also said ETFs would drive the Bitcoin price. So here you really have to think, yes, it could, but what are the timelines? Then the second point is a company maturity. ICOs were often conducted at early stage startups, many working without a product or roadmap or team, and companies going public now like Circle and Coinbase in 2021, and potentially Gemini, Kraken, and any other big cryptocurrency exchanges are very well established businesses. The third point here to compare to ICOs is the investor base. ICOs opened the door to retail investors, and again, as I mentioned, it was Ethereum, Bitcoin, and now stablecoins that people could use to invest into a bunch of random tokens. And even though IPOs are like, the P stands for public, most of the buyers are actually institutions. So this really seems to be like an institutional capture in this case. So it's like ICOs, but institutions style. And finally, the fourth point is the fundraising mechanism. So for the ICOs, people were selling tokens, and you could argue that tokens did represent the ownership of the project, so to say, but it's not exactly equity. For many cryptocurrency companies, there is like a foundation that could have potentially shares. However, the tokens are not part of that. So in here, we are talking stocks, we are talking shares, we are talking equity of the company. So when people are buying Circle as a stock, they're not buying USDC. To be honest, I'm kind of confused why it is valued so highly, because Circle is basically, it has one only product, USDC, and its only revenue source is short-term government bonds. I mean, it's very main, like over 90%, like 98% or something. And people who are investing into Circle could just buy short-term government bonds themselves, because it's, I mean, if they trade on the US stock exchange, they for sure have access to those. So they are really betting on the fact that stablecoins are going to become so huge and so vital that the company itself is going to be worth beyond what its revenue sources are. Or maybe that it will become something more diversified or maybe used in some other aspects. So again, as I mentioned, I'm confused, and I would like to see whether this and how this plays out. Overall, the market has matured, the companies are much more established, and the regulations are clearer. You could argue that the crypto revolution has failed because we became kind of one with TradFi, or you could argue that crypto is about to become mainstream. However, I'll just touch again on the nuances I mentioned about this IPO boom and something to be careful about. This is not financial advice, just my opinion. Some companies may potentially rush because they see the hype of the IPOs and the success of Circle, so they could rush into IPOs and actually become a bit more similar to the ICO of the 2017 style, where the product is underbaked, there is no revenue source, and the team is kind of weird. However, I do believe that the regulations could help along those lines, but you still have to be careful about valuations. No stock is immune to too high of a valuation. You're mindful of the valuations, especially for crypto companies. And speaking of revenue, even for existing companies like Circle, the primary revenue source is short-term US treasuries, US reserves. So once the interest rates are going down, hopefully they go down at some point, this revenue source is going to be not as stable, not as high. So there is at least some perspective of it to, diversify its revenue source. Or if it doesn't, I would really be questioning Why are we, valuing it so highly? What do you think? Is this like a new era of crypto ex TradFi, and this is more regulated and transparent and great? Or do you think we failed the crypto revolution? Or are there still unseen risks that we are not seeing or I haven't mentioned? I'll be very curious to know your thoughts and to talk with you in the comments. But that's it for this video. Thank you very much for watching, and see you in the next one.